Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks track Wall Street lower, capping off a volatile week marked by conflicting views as investors balance tech optimism with concerns of inflated valuations. U.S. President Donald Trump hosts the leaders of Central Asian countries as he looks to diversify access to rare earth minerals. Plus, first ever potential trillionaire. Tesla's shareholders vote in favor of Elon Musk's $1 trillion pay packet. Well, it's just gone 9 a.m. across the Emirates. I'm Johanna Versace in Dubai. Well, these global equity markets are on track for a weekly loss. It feels strange to say that, but the handover from Wall Street yesterday, we saw quite the pullback for both the S&P and NASDAQ. Similar theme playing out with the Asia Pacific index this morning. You are seeing S&P futures stabilize here, but the handover from Asia Pacific quite negative, down 1.2%. The likes of Nikkei down more than 2.5%. The Kospi also getting hit quite aggressively this morning. So anything to do with AI tangential, chip makers, SoftBank even also getting very substantially sold down in the overnight. But also in the U.S., attention being played to some of the jobs data that came through, those challenger job cuts. I'll get to them in a moment, but that sort of set the tone for risk off as well and was a catalyst for 10-year yields to rally more than 6 basis points throughout the course of the day. Yesterday, at one point, we were at 415. We're down now to 409. And then the USD, interesting, in an environment of so much risk off, actually what we saw was the USD also got sold. So everything, all of these correlations being tested when you had the pullback in equities, you had rates rally, but you also had the USD weaker as well. But now, I mentioned the challenger job cuts. Let's just switch over because I want to show for you pictorially how weak these numbers were. So the challenger data shows the third highest level of job cuts since 2020. And actually, I was reading this morning for the month of October, the worst month in over 2 decades. And why is that happening? Well, what you are seeing is a lot of job cuts related to, again, the advent and the rollout of artificial intelligence. And you hear it more and more. Remember, a couple of weeks ago, we were talking about Amazon removing some middle manager or manager jobs. Other companies coming out with similar stances overnight as well. And so this really is going to be a big focus for the market, especially because we still aren't getting the official data in light of the shutdown. So there's a lot more emphasis on these types of private figures that are being released. So yesterday, challenger data was a bit of a shock to the market. All right, let's move on. President Trump says he is looking to diversify critical minerals purchases during a meeting with 5 Central Asian countries as the U.S. seeks to address China's dominance in the sector. Bloomberg managing editor Jill Deesas joins us from Hong Kong. First of all, Jill, talk to us about this meeting, what came out of it. And clearly, President Trump has one thing on his mind, and that is rare earths.
Yes, that's right, Shumana. So this is ultimately a meeting with these 5 Central Asian countries that do possess pretty vast resources when it comes to those critical minerals, rare earth substances. What Trump is ultimately looking to do here is try to forge these other ties, particularly in light of this evolving U.S.-China relationship. So, I mean, these are all nations that, have these critical minerals. They were really central to the Soviet Union's formation of its nuclear program. So, there's some opportunities there that Trump sees in terms of fostering some of those ties. Because remember, when it comes to the U.S.-China truce, I mean, you did have those threats from Beijing earlier this year and actually quite recently as October to essentially install some pretty severe curbs on the export of rare minerals, of which China has significant control. We now have this year-long trade truce in place. After the Trump-Xi meeting that took place quite recently, Trump said that that China had agreed to roll back some of those curbs. But when you're looking at a truce that maybe is only going to last a year, in light of how strategically important these minerals are for the development of everything from fighter planes to electric vehicles and such, it does make sense that the U.S. would be trying to sort of bolster its other options and try to foster those relationships so that it can expand the sources from which it gets this kind of supply.
Yeah, one of the other data points I was watching out for this morning is the fact that Chinese exports actually fell for the month. An interesting development there. And obviously, this was before that reconciliation, the meeting took place between President Xi and President Trump. One of the overarching questions for the market here is how long really, or how likely is it that this year-long truce between U.S. and China is going to hold?
Yeah, it's an interesting question, Jumana. I mean, remember that before this truce was ultimately reached, the U.S. and China had been extending these sort of mini truces by a period of 90 days or so. Now, we're looking at really revisiting all of this in a year. Being said, maybe, tensions between the U.S. and China are lifting a little bit now. You're seeing some of those tariffs, particularly the ones that Trump had slapped on China because of fentanyl, decreasing to 10%. So you're reaching sort of, a modest, sort of pitch there that these two countries are continuing to relate to each other at. But that doesn't mean that all of these tensions go away. And there's still some pretty significant national security concerns from both the U.S. and from China when it comes to how to manage each other's relationships. A lot of questions over sort of chip exports in particular, types of chips that can be, sent to each market and such. I think that these are all issues that we're going to revisit certainly next year, if not sooner, just because, there's a lot at stake. Both of these countries have a lot to lose, a lot to gain, and so it would make sense that they'd continue to try to massage that relationship as we go forward.
Jill, thank you so much. Jill Desis, managing editor at Bloomberg. Now, Cleveland Fed President Beth Hammack says monetary policy should continue putting downward pressure on inflation, which she says remains a bigger risk for the U.S. central bank than labor market weakness.
I remain concerned about high inflation and believe policy should be leaning against it. After last week's meeting, I see monetary policy as barely restrictive, if at all, and it's not obvious to me that monetary policy should do more at this time.
Well, joining us now is Omer Chowdhry, lead manager for multi-assets and advisor at Aditum Investment Management. It's interesting to see those comments come through from Beth Hammack. I mean, obviously, she's emerging as one of the more hawkish voices on the Fed committee, but at the same time, placing a lot more weight on the potential upside risk to inflation versus the downside risks that are coming through in the labor market. And then this is coming on the heels, obviously, of that very weak challenger data that I was just describing at the top of the show. How do you see things?
Yeah, it's interesting. We've seen a lot more dissent at the Federal Reserve than we've seen in a while, and there's a lot of divide. Some are leaning more on potentially higher inflation coming through from tariffs. That's if tariffs actually go through. We still have a Supreme Court ruling that has to come out. And some are leaning more on a potential weakening labor market, and Powell's playing the neutral stance in the middle. We've been calling for, a gradual but maybe even slightly accelerated weakening in the labor market for a while, and our positioning has reflected that. We've been adding duration in our portfolios in summer. Of course, rates volatility hasn't helped, but it's tough. It's tough. I think the odds of a rate cut in December are going up for a coin toss at this point. The lack of data doesn't really help.
Yeah.
The Fed might err on the side of caution and hold, and that presents the risk that the labor market weakens even more, and then they have to scramble to cover ground.
Yeah, which means it probably leads to an accelerated rate cutting cycle eventually when the shutdown ends. Yeah, too many questions up in there. What do you make of the price action this week and the fact that equities are on track for a weekly loss?
Yeah, I mean, it's been an incredible run from the April lows, right? Especially in the AI and tech sector. It's good to have a pause. I don't think there's a fundamental shift in the narrative behind AI and tech. I think that continues for a while. It's just a valuation rethink, maybe a slight reset in valuations as well. Equity prices tend to get ahead of themselves sometimes, especially when you have a major trend going on like AI. And so we're not really worried. The Nasdaq 100 is down about 3% from peak. Nothing major. A bit of a hose down is good after things get overheated. So we're actually looking at it as an opportunity to maybe even add to positions if it gets to a level that we like.
Yeah. Does this open up an opportunity for other parts of the market to lead? So much of the leadership has been centered around those handful of stocks. There isn't a lot of breadth in this S&P rally. Do you think that this perhaps opens the opportunity for other parts of the market to step in?
Could be. So narrow breadth has been a concern for a while, and it's gotten even narrower in the last 6 weeks. We've seen a couple of days where the whole S&P and most of the stocks were down, other days where tech was down and other sectors are up. That kind of shows that, diversity is good in a portfolio as well, and not having it concentrated in tech and AI alone. I think if investors think that we're heading towards a slower economy, a weakening jobs market, they might add some defensive plays into the portfolio. That's not a bad idea. So, yeah, it does warrant having a bit of allocation to other sectors as well.
Do you think that these fears of an AI bubble are overblown at this point, given your proclivity to buy into the weakness that you just spoke about?
Yeah, I think, look, the AI adoption generally is going to be a multi-year trend. It's going to take over, lives in every sphere. The players will change, and it goes in stages. We're in the infrastructure setup stage right now. I think that still has room to run, and the leaders of the market will change hands at some point. I think fears of a bubble, it's hard to tell. It's more of a hindsight thing. Major bubbles don't happen very often. This could end up being one, and they burst very rarely as well. We saw when the dot-com bubble burst and global financial crisis. So I think a lot of people that call for a bubble might be people that either missed the run or aren't involved, maybe, or just having a bit of a rethink. So fears of a bubble bursting are probably overblown, but valuations getting ahead of themselves, I think that's a concern.
Okay, so geographically, are you predominantly invested in the U.S. right now, or are you looking at other geographies too?
Well, our strategy is kind of benchmarked, so yeah, U.S. tends to have the bigger piece, but we do look at other regions as well. Again, tech and AI is a favorite, and China has a big sector in tech and AI. That's woken up in the summer, especially when the government has kind of stepped back from scrutinizing these big tech companies and said, you know, off to the races we go. We have to play catch-up to the U.S. So those stocks have been ripping and roaring. Japan has an AI tech sector as well, some semiconductor names as well. That's pretty strong. So Japan and China are two regions that we're looking at. Japan has a pretty strong economic backdrop as well, and the political noise might be behind us, so we're looking as a bullish case for Japan.
Given how much of a pullback that we've got also specifically in some of these Asian stocks, you know, you mentioned Japan, SoftBank, some of those chip makers in South Korea. Do you worry that perhaps retail are going to take flight and that this could lead to a broader capitulation in risk sentiment?
Could be. Look, things get carried away to the upside. They can always get carried away in a correction to the downside as well. And that's the time when you really have to believe in the narrative and buy into it. In terms of retail, yeah, I mean, it could happen that they could carry this further down. But, you know, we haven't really seen the kind of melt-up that would lead to concerns that this is going to be a deeper correction. Things haven't really gone parabolic. So I think that, you know, a correction that's more than like 5 to 7, 8% may start posing some concerns. But up to that level, I think it's still pretty healthy.
Yeah. Omer, thank you so much. Really good to chat to you.
Thank you.
Omer Chowdhry, Aditum Investment Management, lead manager for multi-assets and advisory. Now, for a look at some of the other stories we're following, the Bank of England held interest rates at 4% in a tight vote that laid the groundwork for a December cut. The meeting minutes show Bank of England Governor Andrew Bailey was the most dovish of the officials who voted to hold rates. He told us monetary policy still remains restrictive for the moment.
Now, in August, I would say I was concerned more on the upside risk, but I think the news that we've had subsequent to that has left me in a more balanced position, so that was very much my view. But as I've said a number of times, we do need to see more evidence, because so far we've had one inflation number that's come in, you know, under what we thought, which is obviously good. We need to see some more. Now, I think the conditions at the moment suggest that policy remains restrictive. We've passed peak restriction, I think, but that's not surprising. We've been cutting rates, and no surprise there. That's what we intended. But I think it remains restrictive for the moment.
Nancy Pelosi says she'll retire from Congress at the end of her term, capping nearly 4 decades in Washington. The 85-year-old California Democrat was the first woman to serve as House Speaker and led her party for almost 20 years, helping pass major laws under Presidents Obama and Biden. Her retirement leaves a vacancy in her San Francisco district and marks the end of an era for Democratic leadership. And coming up, the world's first ever potential trillionaire. Tesla shareholders overwhelmingly back Elon Musk's unprecedented $1 trillion pay packet. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersetchi in Dubai. Tesla rose in late trading after shareholders approved a $1 trillion compensation deal for the CEO, Elon Musk. It's the largest such corporate pay packet ever awarded.
Sixth and finally, on the 2025 CEO Performance Award to our founder and CEO, Elon Musk, with over 75% voting in favor. Approved.
For more, we're joined by Rachel Chang, Bloomberg's managing editor for Asia Global Business. Rachel, well, over 75% of shareholders voted in favor. What other details do we know about this new pay package, apart from the eye-watering sum?
Right, indeed. I mean, the main thing to know about it is that it's not at all a guaranteed amount. It's not like Elon Musk becomes a trillionaire overnight. The pay package is tied to very significant milestones and performance milestones for Tesla, the core vehicles and also its future plans like the Optimus robot. So, for example, the full pay package envisions Tesla as an $8.5 trillion company. Its current market cap is under $2 trillion. So, you know, that's a long way to go. And really, the electric vehicle industry right now is very different from when Tesla first came onto the scene. It's very competitive. The Chinese makers especially are really flooding the markets outside of the US and becoming very competitive to Tesla's initial dominance. So there are a lot of questions around whether Tesla is going to be able to achieve these milestones at all. One thing is certain is that they really believe, and most of the shareholders do now, that only Elon Musk can get them there.
Yeah, I guess it's a positive as far as the, Tesla believers take it. Look, I want to just change tack a little bit because the backdrop to all of this is the U.S. shutdown. It's still ongoing. And in the last 24 hours, I thought it was really interesting to know that U.S. airlines have started to cut flights. So we're actually seeing a real tangible impact now of the shutdown that it's having on transportation activity, not just transportation, across all areas of the U.S. economy. What do we know about the airlines, how the schedules have been impacted, and the likely impact that that's going to have on flights in the coming days?
Right. The situation is getting worse and worse. We do know that the government has advised airlines to essentially cut flights by 10% over the next week. So by next Friday, that overall capacity should be down by 10%. Airlines are moving ahead of the government guidance. We already see around 700 flights being announced by the top 4 airlines in the U.S. that have been cancelled from their schedules. This is, of course, creating a lot of chaos at airports. They do say that the biggest urban destinations, New York, California, these are unaffected, and they're also saying that international routes are not affected. But we do know that that chaos is going to keep having consequences throughout the entire aviation system. For example, international flights cannot land or take off during certain times where they don't have enough air traffic controllers as well. The situation will keep getting worse because it all comes back to the fact that around 13,000 air traffic controllers are working without pay right now. And while in theory they will get that back pay when the shutdown is finally over, you do see a lot of people who are calling in sick, who cannot come to work because of the situation, and that is what the U.S. government is saying underpins, what they have to do right now. Yeah, wow. Pretty shocking statistics there. And also a reminder that we're heading into holiday season too. So there will be a lot of unhappy travelers as the schedule starts to slow down. Rachel Chang, Bloomberg's managing editor for Asia Global Business in Hong Kong. Thank you. Now for a look at some of the other stories we're following. Boeing will avoid criminal charges over 2 deadly 737 MAX crashes after a federal judge approved a more than $1 billion settlement with the U.S. Justice Department. The deal includes fines, a fund for victims' families, and new investments to improve safety and compliance. In a written ruling, the judge said the agreement fails to secure the accountability needed to protect the public, but noted that the court doesn't have the authority to reject the settlement simply because it disagrees with the government's decision. Goldman Sachs is promoting the smallest proportion of women to managing directors since the CEO David Solomon took over in 2018. Women make up 27% of Goldman's new managing director class. That is down from 31% last year, breaking a years-long upward trend. Solomon has publicly pledged to improve diversity, but female representation has also fallen on the firm's top management committee. And coming up, world leaders are gathering in Brazil as the focus turns to climate action at COP30. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. World leaders are set to deliver a message of solidarity and renewed resolve to address global warming days before the start of the COP30 climate summit in Brazil on Monday. Bloomberg's Jennifer Delowy has more from Belém.
A world leaders summit on climate opened in the Amazonian city of Belém, Brazil, with world leaders exhorting other nations to move faster and harder in addressing global warming. The world is falling far behind in its fight to limit warming to 1.5 degrees Celsius, they said, warning that passing that critical tipping point would make conditions unlivable for billions of people. Brazil's finance minister announced the country's signature effort to protect the world's rainforests had secured at least $5 billion from other nations, even as Brazil works to line up more financial pledges. Soon, the focus will shift to negotiations over how the world can adapt to climate change and implement a past pledge to transition away from the oil, gas, and coal that is fueling it. Brazil's President Luiz Inácio Lula da Silva foreshadowed a potential effort by nations to map out a concrete plan for transitioning away from those fossil fuels. If delivered, it could become a headline achievement from the upcoming COP30 negotiations. I'm Jennifer Delowy, Bloomberg News, Belém, Brazil.
And now for a look at some of the other stories we're following. U.S. President Donald Trump says Kazakhstan is joining the Abraham Accords. It's a largely symbolic move as the U.S. looks to inject new momentum into the initiative following a ceasefire between Israel and Hamas. Following a call hosted by Trump with Kazakhstan President and Israeli Prime Minister Benjamin Netanyahu, Trump hailed Kazakhstan's decision as a major step forward in what he described as building bridges across the world. The United Nations Security Council has voted to lift sanctions on Syria's President Ahmed al-Sharaa and his Interior Minister Anas Hassan Khatta. The two men were under terrorism-related sanctions for their affiliation with al-Qaeda and the Islamic State of Iraq and the Levant. The move comes a few days before al-Sharaa is scheduled to visit the White House, where he is expected to announce Syria will formally join the 89-member global coalition to defeat ISIS. The U.S. is seeking United Nations support for a proposal to send foreign troops into Gaza. The proposed international stabilization force would work with Israel and Egypt to secure the territory and assist with rebuilding efforts after more than 2 years of war. The U.S. mission to the UN says it has received support from the 10 elected members of the Security Council. And a quick look at equity futures. Some stabilization coming through for U.S. markets after a down day yesterday. Things are looking up today, pointing towards the green, but the handover from Asia not pretty at all, with the Nikkei down around 2%. Very heavy losses for some of those Asia-Pacific indices, but in the U.S. there is green on the screen. Coming up, we're going to be speaking to Louw, EM Fixed Income Portfolio Manager at 91, on why EM remains resilient. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks track Wall Street lower, capping off a volatile week marked by conflicting views as investors balance tech optimism with concerns of inflated valuations. U.S. President Donald Trump hosts the leaders of Central Asian countries as he looks to diversify access to rare earth minerals. Plus, first ever potential trillionaire. Tesla shareholders vote in favor of Elon Musk's $1 trillion pay packet. Well, it's just gone 9:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. What a week it has been. Quite a bumpy week for markets, as witnessed by the price action over the last couple of days. Negative for Wall Street, with the major indices S&P posting losses of more than 1.1% yesterday. The Nasdaq major pullback there, too, of down almost 2% by the close yesterday, down 1.9%. There is some stabilization coming through, as you can see from those S&P futures, but the handover from Asia, not pretty at all. The Asia-Pacific index as a whole down 1%, but some bigger losses on the Kospi, now tracking 2.5%. The Nikkei down almost 2% as well. We'll speak shortly to our colleague in Asia for some of those, for some of the price action there. 10-year yields also in focus yesterday, down to 4.10. We rallied about 6 basis points after the Challenger job data came through. I'm going to mark that in just a moment.
bottom line is the numbers that came through were very weak, and there's more emphasis on this data right now because of the shutdown, because we're not getting the official data. So any signals that we're getting about the U.S. economy are being heavily parsed, and one of the data points yesterday was not supportive at all for the labor market. The USD also slipping yesterday in trade, today stabilizing somewhat, but a theme of risk off across the board yesterday, rates rallying, and also surprisingly the USD coming off. So let's talk about that challenger jobs data, because this chart is going to show you it has been the weakest number since COVID. So we've had actually the third highest level. This is the third highest level since those COVID days. But I was reading earlier today on the terminal that it's actually the weakest October in over 2 decades. So signaling that there have been job cuts announced across various private companies, but then also specifically on back of the advent of artificial intelligence. We are beginning to see a real world impact of AI, its application, and the impact it's having on job cuts, with anything from entry-level jobs to manager jobs being shed. So this was a big focus for the market yesterday, and also is going to be relevant for the Fed as they weigh up their next decision, with some perhaps upward surprises to come through on inflation, but then these downward surprises coming through on the labor market. Okay, let's turn now and dig a little bit deeper into how some of these Asian markets are faring with Winnie Su in Hong Kong. So just recap for us the price action today in these Asian markets, what's been going on exactly, and why the Kospi is the major underperformer.
Yeah, morning, Jumana. It has been a very volatile session for Asia today, as well as for the whole week. And I think, interestingly, we are seeing that the volatility in Asia has been bigger than that of the ones in the U.S. or in Europe. And a couple reasons here, right? Mostly because just how far the Asian stocks have run so far this year. We're talking about MSCI Asia headed for yearly outperformance against the U.S. stocks, the biggest since 2009. So just that big rally with SK Hynix up more than 200%, Avantas also more than 100%. So it's quite natural to see these bigger profit taking after such strong rallies. And also on top of that, AI concentration is becoming more of an issue in Asia compared to how it has been very well documented in the U.S. Now we're talking about TSMC having over 40% of the TAIEX index, and Samsung plus SK Hynix over 30% for Kospi. So any of these moves in these Asia tech names are likely to trigger bigger moves in the broader index compared to before. Then on top of that, you have how Asian market are just more retail driven. So although we had that sell off from institutional investors, we saw retail investors rushing in, sense of FOMO there, and hence that big swing we saw over the week. And also overall, we are seeing a bit of a strength when it comes to the U.S. dollar, and hence more pressure on riskier assets, which are Asian stocks, and specifically these Asian tech names.
Yeah, good point on retail exposure. One other data point that struck out to me overnight: China exports surprisingly contracted for the month of October. Is this a big deal for the market, or are investors looking through this? Because obviously since then, we've had the reconciliation between President Trump and President Xi.
Yeah, so from a market perspective, it seems like traders are looking past that, because you see that the CSI actually trading quite flat. In fact, I believe just now we did see the CSI 300 flipped into the green. And so overall, because, you know, now that we have that trade between President Trump and Xi, traders are looking past the data to focus on how more trade deals are likely to come. But from an economic perspective, it is quite a disappointment, because we are talking about the export falling 1.1% compared to the previous year, and we had an estimate of 2.9% of growth. So that disappointment means that it is likely that we're going to see further slowdown when it comes to economic growth for China rest of the year, and that it's going to be more difficult for China to hit that 5% growth target. But we are keeping a very close eye on the CPI and PPI numbers over the weekend to give us a better picture of kind of how the overall strength of the Chinese economy is.
Winnie Su in Hong Kong, thank you so much for the overview. Well, currencies and stocks in developing economies advanced, benefiting from a decline in the dollar during a volatile session
in global markets. Joining us now is Louw, EM Fixed Income Portfolio Manager at 91. Let me ask you about, it's interesting, the diversion that we've sort of got between EM and DM. But actually, let me just ask you about the USD and the fact that the dollar actually has been stabilizing over the last couple of weeks. What does that do to the EM investing thesis?
Morning. I think that the reality with the dollar stabilizing more recently, it doesn't actually change the big narrative that we had this year. So we thought this year was going to be all about tariffs, and that would be a much stronger dollar. But what's actually happened is the dollar over this year has become much more cyclical over time. And so I thought yesterday is an interesting example with the S&P down, dollar is down. And so I still think the market is trying to find where it sits within that smile. And that's quite important for allocations into emerging markets. And so we've continually seen this year, after a period of, I would say, quite muted flows, that people are looking towards diversification from dollar assets. And so I think the more recent stabilization that you've seen within the dollar has actually, been related to better economic outcomes. People have been less worried about those essentially job cuts, which you just mentioned, are still happening. But even under the surface for emerging markets, I think there's still been strength within that. And so despite the dollar stabilizing over the recent period, we've still had very strong performance in what we would call carry currencies. And so people are still looking towards EM, and they see a universe which is generally seeing improving credit quality, so upgrades versus downgrades. Emerging markets are in a very good space. Yeah. You still have high real rates, and so generally that's still quite supportive.
So I want to go back to something I started off the discussion with, and the fact that nowadays, it's funny, when you talk about fiscal concerns, it tends to be centered around advanced economies and less so emerging market economies. Why do you think that's the case?
I think necessity is the mother of all good government policy. And I think with an EM, having experienced crises, essentially starting in 2015, 16, COVID in 2022, when you had a default cycle within emerging markets, I think, the idea of modern monetary theory or running excessive deficits for a sustained period of time is just not a reality emerging markets can deal with. And so I think that necessity for adjustment has driven that fiscal, the willingness to take the fiscal pain, right? And so I do think it comes from the fact that emerging markets have been essentially battle-hardened part of the market, and so the willingness to adjust is much higher, because the alternative is that your yields, sell off dramatically, your currency sells off dramatically, and you'll find yourself in a much worse spot, which is not always the case in developed markets. They tend to use the liquidity available to them and avoid making the tough decisions.
Yeah. I don't know how closely you look at Asia, but again, just your perspective there on how some of these EM currencies most exposed to the trade war have weathered the storm of tariffs.
I think they've weathered it reasonably well, especially at the start of the year, right? So Q1 was defined Q1 and Q2 was defined by the diversification theme. And so you saw significant rallies in the likes of Taiwan, Korea. And so I think that's a theme which I think surprised a lot of people. And so we know there are countries which have a lot of investments in the US. And they've looked to adjust things like hedge ratios and the asset allocation on the back of that. I think that performance has been kind of shifted away from Asia being the outperformer towards other high carry currencies being the outperformer in Q3, Q4. But I think relative to history, those currencies have performed much better than people would have expected. And they're still historically, I would say, cheap. I think the one issue that Asia faces from a currency perspective is they're still very low yielding for investors. And so people would look at the relative yield that you can get on Taiwan relative to the dollar. And so periods of US economic outperformance, I would say those currencies have struggled more than you would see in other parts of the emerging markets.
Yeah. Given how tight spreads are there any specific names that you're underweight here?
Yeah, so I think from an underweight perspective, we're looking at issuers which haven't really taken or are going in the wrong direction from a fiscal policy perspective. We don't have a lot of risk premium, and we expect more issuance. And so within the Asia space, a country like Indonesia would be a name where after a period of sustained low fiscal deficits, they are toying with the idea of expanding, focusing on growth, Again, we think you'd rather be underweight there. Even within the higher yielding space, a country like Brazil is a country that we're underweight, and that has to do with increased issuance and fiscal risks into the election that they have next year. And we essentially offset that by finding, I would say, high yield issuers which are making the adjustments, but we do still have excess risk premium in those names. So a country like Argentina would be a name which we have as a counterweight against those underweights.
Taiso, thank you so much. A real pleasure to chat to you today. EM Fixed Income Portfolio Manager at 91. Now for a look at some of the other stories we're following. Commodity trader Gunvor Group has withdrawn its offer for the international assets of sanctioned Russian oil producer Lukoil. The move comes after the U.S. Treasury Department called it, quote, the Kremlin's puppet, and said the oil and gas trader would never get a license. Now, speaking to me on Tuesday, the company's CEO, Torbjørn Torgfest, said the deal would represent a, quote, clean break away from Russian influence or control. Gunvor's withdrawal may now leave the door open to other suitors for Lukoil's assets. Novo Nordisk has further increased its offer for obesity drug maker Metsera as its takeover battle with Pfizer escalates. Our sources say the bidding war is set to end within days, with Metsera's decision likely to come down to which firm can pay more. Pfizer initially agreed to buy Metsera for $4.9 billion in September before Novo shocked Wall Street with a higher bid. Meanwhile, Novo Nordisk and rival Eli Lilly have secured deals with the Trump administration to slash prices for their blockbuster weight loss drugs. That's in return for tariff relief and wider Medicare access. An official says the company's medicines will receive a 3-year grace period from Trump's forthcoming duties on pharmaceutical imports. And coming up, we hear from the world's former #1 tennis star, Serena Williams, on her journey from the court to investing. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Dubai. Nearly a decade after launching Serena Ventures, Serena Williams is channeling her competitive spirit into investing. She spoke with Bloomberg's Danny Berger at the American Business Forum in Miami about life after tennis and building her venture capital firm.
I don't like the word retired, but when I evolved from tennis, I had already been investing for, I don't know, like 8 years at the time. I'd already had my firm. I had already built a great team of people that were way smarter than me around the table. And it wasn't something that I would just have a hard fall from. I felt like I wanted to have a softer landing, which I don't know if I did or if I didn't. I wanted to have a softer landing, but I also didn't want to start something new when I just finished something. And that's something, again, my dad had always told me, like, you can't go into something brand new when you finish. You need to already have it started. You need to already have a plan. You know, if you don't have that plan, then it's going to be difficult to start something new. And so I was really grateful for that, because if I were to have started investing now, after I retired, I mean, oh my gosh, the learning curve and doing everything, it would have taken years and years, and a lot of that experience was already done while I was playing. So,
well, you know, it's such a good point that it is the model now that as an athlete, you're almost expected to be so much more than that. But even so, there have been a lot of public figures who've decided to go into investing, especially because you were early on in doing that. Did you face any sort of stereotypes of people rolling their eyes saying, what is an athlete doing in business?
I did, not too many, but there are obviously a lot of people rolling their eyes and saying, like, what are you doing in investing? But again, that now was over 15 years ago. So I definitely was earlier on, I was much earlier on the curve when it came to investing. And it was something that was really innate, that I just kind of flowed to, and that was something that really just attracted me. And it was actually early stage investing that really attracted me for whatever reason at the time. Of course, I didn't know it was called early stage. I didn't know what anything was. I didn't know what a seed was. I didn't know any of that stuff. It was this really great learning experience. I loved what Jamie Dimon said earlier, how life is really just about learning. You're learning every single day, and that's kind of a theory that I love. And that's one thing I love about VC. Every time I step into the office, I feel like I'm in college and I'm learning something new about some other product and what it does and what it doesn't do, and how we don't have it yet.
Serena Williams speaking to Bloomberg's Danny Berger at the American Business Forum in Miami. Well, coming up, the IMF leaves Senegal without a new deal, but talks will continue to resolve the fallout from billions of dollars in hidden debt. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. The IMF is pushing ahead with talks on a new program for Senegal, but a deal remains on hold for now as both sides work to resolve the fallout from billions of dollars in undisclosed debt. Our chief Africa correspondent, Jennifer Zabazaja, joins us now from Johannesburg. Jen, quite simply, what is standing in the way of a new IMF deal for Senegal?
Right. Well, Jumana, this is really the conclusion of a 2-week staff mission to Senegal that we had been watching very closely since October. And of course, since we heard from Kristalina Georgieva about their desire to really find a conclusion to this situation in Senegal. But what we know about the staff mission is that there's still some confusion and really they're trying to determine how this misreporting happened on their last debt. So as you know, there was, of course, an audit that was made from the Faye administration, taking over from the previous administration, and they had found that there was billions of dollars that had not actually been reported. Not just that, of course, we do know that there was a discrepancy really between the amount of debt to GDP that the government had reported and also what the IMF had actually found. And so right now we do know that the IMF Executive Board is really just waiting to understand more details about this misreporting case. And what they say is decide whether to waive $700 million that had already been paid out under the suspended program that was suspended earlier this year. What's potentially positive, though, is it seems like there are a lot of, there's quite a bit of encouragement to find a program and to find a resolution to this. We heard from the mission chief who is in Senegal who said they've never seen anything like this before and that they are encouraged and engaged to determined to move as fast as possible to help Senegal. And it's seeming like Senegal as well is quite confident that they can get there. And it's seeming like a lot of the issues that we had with the previous administration with President Macky Sall is potentially getting to a place where there's transparency and there's potentially some consistency in terms of fiscal stability. But they did walk away this time around not with a program, but it's looking like they're potentially heading towards one soon.
And Jen, how serious is the country's debt problem to begin with anyway?
Right. Well, really, the concern is if you take a look at some of the numbers. And the IMF, as I was just mentioning there, did, in fact, put out their own report. And they found that debt to GDP was actually 132%. And as I mentioned, the government had actually found that at the end of 2024 that it was closer to 119%. So there's some concern there about really what does this mean for the government. But again, there is a lot of encouragement that they are able to stabilize their finances. We heard from Senegal saying that really they believe that their targets are quite ambitious, but that they do think that tax revenue can grow. And in fact, some of the issues that some investors had found previously for the likes of subsidies and the like have given them confidence again to go back into Senegal. But still, it is a situation that has caused some issues on the ground there, of course, if you take a look at inflation and the cost of living. And so President Faye has had to take some difficult decisions in order to achieve some of the goals and the targets for this IMF program. So something they really want to find a resolution to in order to keep moving forward, because, again, Senegal is another one of those fastest growing economies on the African continent.
Jennifer Zabazaja, our chief Africa correspondent in Johannesburg. Thank you. Now, for a look at some of the other stories we're following, Democratic Republic of Congo has suspended operations at cobalt firm Congo Dongfang International Mining after a retaining wall failed at one of its projects, spilling polluted water into the city of Lubumbashi. The unit of the world's largest cobalt refiner, Zhejiang Huawu Cobalt, will have operations halted for at least 3 months. DRC's mines minister said the company must repair the environmental damage, pay workers, and compensate the affected population. The Associated Press reports Sudanese paramilitary group Rapid Support Forces has agreed to a U.S.-led proposal for a humanitarian truce. The plan, backed by Washington, Saudi Arabia, Egypt and the UAE, calls for a 3-month truce, followed by 9 months of political talks. A Sudanese military official said the army welcomes the proposal, but will only agree to a truce when the RSF completely withdraws from civilian areas and gives up weapons. And let's round up taking a look at how equity futures are trading. Stabilization for S&P and the Nasdaq coming through this after deep declines yesterday, with both of those indices falling respectively 1.1% and 1.9%. And as we head into the European session as well, seeing a bit more green there, up 10 basis points. But the handover from Asia, not so pretty. That is it for Horizons Middle East and Africa. I'm Johanna Versace in Dubai, but stay with me for the next show, Daybreak Europe. This is Bloomberg.